Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of Euro Dollar, Euro USD for Monday. This is my last video. I'll be leaving for a break and I'll be back on July 1st again. So if you want regular analysis of the market from July 1st onwards, then please subscribe to my channel. So let's get started. So this is a 4-hour chart of DXY, and as per our expectation and previous discussions, we can see that DXY is still trading in a downward channel here. The last traded price is 101.63, and I was going through some articles and the experts are also of the opinion that the correction on DXY may continue for the next couple of days. But my dear friends, keep in mind that in the first week of June, there are some events lined up like NFP, and there may be some volatility in the market. Okay, till then there is a possibility that you may see the downtrend or the correction on DXY continuing. Okay, one thing I would like to add here is that we have a support in the form of Fibonacci 50% retracement level around 101.38, the red line that I have drawn here. So by next week, there is a possibility that DXY may try to take support and may try to bounce from here as well. So 50% retracement level on the Fibonacci chart holds a special position in the forex market, because I have been observing for a long time. Okay, so there is a possibility that market may try to take support, and in case market reverses from here, there will be a reversal on the chart of Euro USD as well. So I think that DXY's position or its movement will be extremely important, so please keep your one eye on DXY always. Okay, now let's try to understand what are the important levels for Monday. So here is our beloved Euro USD. Just like the chart of gold, okay, if we go to the forex sentiment meter, just like the chart of gold, we can see that retail traders in case of Euro USD also are confused right now. Retail traders, 50% are on the sell position, they have taken short position, and 45% are on the buy position, they have taken long position. So we do not have a clear picture from the forex sentiment meter as well. So retail traders are also not sure in which direction the market will move. And this is the 4-hour chart of Euro USD here. The last traded price is 1.0734. This is the last traded price, and just the opposite of DXY, we can see Euro USD trading in an upward channel right now. But if I just ask you to focus on this particular portion of the market here, though we can see the market is in uptrend right now, but if we just focus here, then we can see that somehow the buying power is slowly diminishing. So there is a possibility that market may reverse from here. So if DXY reverses from the 50% retracement level that we have just discussed, then there may be some sort of downside or some sort of reversal on the chart of Euro USD as well. And after, we cannot forget the fact that overall the chart of Euro USD is extremely bearish. The present trend of the Euro USD may be towards the upside, but overall the chart is still very bearish. By the first week of June, we may get a clear picture in which direction Euro USD may be heading for the whole month. But as of now, things are quite hazy for us. Okay. Anyways, if market continues the present trend, present pattern, okay, and if you see that DXY also breaking the 50% retracement and continuing the downward channel, then obviously the best trading opportunity on the chart of Euro USD will always be taking a buy position at the trend line here. You can see that the trend line at the bottom is acting as support here, but the problem is that market has already tested the trend line too many times, and as we all know that if we find market testing a level too many times, the level loses its strength as well. So be careful, and in case market continues the pattern, then obviously you have no other choice but to take a buy position at the support. Whenever you'll find market testing the trend line, observe the market first, and if you see market market taking support around the trend line, if you see market forming a bullish engulfing pattern or a hammer kind of a pattern, then only take a buy position. Market has already tested the trend line too many times, so you must be careful. After all, it's your hard-earned money, so protection should be your responsibility. And in case market breaks the trend line, then if you have got experience in the market, then you may try to take sell position. Okay, if you have the considerable experience in the market, you may try to take sell position if market breaks the trend line. And if you are looking for safe trading opportunities in the market, if you're a beginner, then I think that you should try to take a buy position around this level, 1.0666, the devil's number. Why this level? Because previously this level has shown us some sort of price rejection, not a very strong price rejection, some sort of price rejection, and along with that we also have the Fibonacci 23.6% retracement level. So if we combine both the factors here, then there is a possibility that under normal circumstances, if market comes down, then market will try to reverse from here. If market reverses, well and good, you can take a buy position. But in case of a heavy selling pressure, obviously Fibonacci 23.6% will fail, and in that case you can look for the 200 moving average. Here you can see that 200 moving average has been acting as dynamic support for quite some time. So the 200 moving average will be acting as the next support. I cannot give you the exact figure right now because this is a dynamic support. Okay, but it can be around 1.0640, 1.0630, but this will be the next support. So please use the 200 moving average in case market breaks everything and starts falling. Okay, so please be careful next week, as I have already said that I will not be available in the month of June. I will not be available from next week onwards, so please be careful, protect your hard-earned money, follow proper risk management. I'll be back again. Till then, take care, bye bye.